to order this meeting of the James City County Board of Supervisors for a budget work session. Mr. Stevens, please call the roll. Here.
Here.
Here. Here. Yeah, I need a motion to allow Ms. Sadler to participate in the meeting remotely due to her illness.
So moved.
Okay, we have a motion. Mr. Stevens?
Mr. McGlennon?
Yeah, aye.
Ms. Larson?
Aye.
Mr. Hippel?
Aye.
Mr. Eisenhower?
Aye.
Motion carries.
Welcome to the meeting, Sue. Still there?
Here.
Okay, good, good. Okay, board discussions. We are going to start with the current fiscal year 2020 budget discussion with Ms. Day.
Mr. Chair, members of the board, if I could just make a few comments before I turn it over to Ms. Day, and just tell you that department heads aren't present this year. That's unusual for me. I like our department head presence, but in an effort to have our social distancing requirements and not have too many in the room at one time, I thought it was better that they not be here. They are watching, or at least most of them are, and they are available if you have by phone. If we have immediate questions or if you have questions for them, we'll get them answered for you before your next meeting. So however works for you, but they are around and they're aware and they're interested. They just are not here at my request to not have a room full. Our discussion today will be centered around the county's general fund for FY20, our current year, and then again for FY21, which is our proposed budget. I do want to share that the county's, in my opinion, in good financial health. Really, that's due to the board's actions and the staff over many, many years to put you in a place where we really are set to weather a storm. And so I just want to reassure our citizens that I do believe we're in good shape. That being said, our intent is not to spend any of our savings. We have a good fund balance or savings within the general fund, and all of our recommendations are predicated on maintaining that savings, which is in excess of $30 million within the general fund, so that we still remain in good shape for whatever may come in the year or so to come. So I just want to share that I do think we're in good shape and reassure our citizens. Ms. Day is prepared to do a short revenue and expense reduction for the current year, so we can sort of talk about the current year, make sure you're comfortable with that, and then we would move on to some of the projections of a 3-month or 6-month or 9-month type of scenarios for our proposed year, and then take direction from there. So if you're okay with that, Mr. Chairman, that's where we would head, and I would, I guess, move it over to Ms. Day unless you have questions. Any questions before she gets started with that? I would share, in addition to your budget books, we provided these handouts. One is her presentation today, so you should have that in front of your seat. And then we had emailed you some information over the weekend, and I've stapled it together so you didn't have too many loose sheets. But this one would have the FY20 revenue adjustments, which Ms. Day will talk about, our expenditure recommendation reductions, which she would talk about. The second sheet is a notice from the school system that we had received some current year reduction amounts that they had shared with us as of, I guess, today or yesterday, but recently. And then we have our FY21 revenue adjustments and expenditure recommendations behind that. And then the last sheet written at the top says our revenue reduction assumptions, and it's really, these were the assumptions that our FMS team used in terms of making a recommendation of what we might collect related to property taxes in both years or sales taxes in both years. And so you could agree or disagree with some of those recommendations. Those would make significant differences maybe in our projections as we go forward. So between now and next week, we'd want to make sure you're comfortable with those recommendations as well. So with that, I'll turn it over to Ms. Day, and we'll see what kind of questions you have.
All right, thank you, Mr. Stevens. Good afternoon, Chairman, members of the board, Mr. Stevens. I thought we would start off tonight really with a timeline and an overview of the COVID-19 pandemic, starting back on March 13th and kind of leading up to today. Back on March 13th, the county did declare a local state of emergency. The James City County school system closed, and there was also the closure of several county facilities, recreation centers, and the libraries to the public. On March the 23rd, an Executive Order 53 was issued, which required the closure of non-essential businesses. It also prohibited gatherings of more than 10 people, and the schools were closed for the remainder of the academic year. On March the 30th, Executive Order 55 was issued, which required a statewide stay-at-home order. Given that the majority of the COVID-19 events did take place mid to late March, there really wasn't sufficient time for us to fully revise the proposed budget before it was released on April the 2nd. As discussed at the public hearing on April 14th, COVID-19 is having an impact on the fiscal year 20 revenue and expenditures. That situation is evolving daily. On the revenue side, we continue to monitor the impact of the revenues, as well as keep a close eye on the various relief programs that are being offered both at the state and federal level. We are capturing our loss of revenue and also any additional costs on the expense side, so we make sure we are properly prepared to file for recovery programs. Over on the expenditure side of things, as I've mentioned before, we have reduced spending limits. We've also put in place several additional layers of approval, and we've suspended any discretionary programs. On the personnel side specifically, we've implemented a hiring freeze. We furloughed our part-time employees. We're diligently tracking our staff's time, again, to make sure we're remaining efficient and productive while we do continue to work by alternative means. And again, we've suspended several discretionary programs. Our focus is on preserving cash and also providing those essential services. We have solicited the help of our departments to delay and eliminate entirely non-essential, non-personnel items, as well as capital projects. As I've mentioned before, we are working in close partnership with the Williamsburg-James City County Joint School Division. They do comprise about 52% of our budget. We've had several conversations with them to date. Mr. Stevens and myself both are in daily contact, most often several times a day, with conversations, and I can tell you they've implemented several of the measures that we've implemented, as well as some additional procedures. As Mr. Stevens mentioned, tonight's focus is going to be on the general fund, which is also known as our operating fund. This table reflects the fiscal year 2020, which is the current year, adopted budget, and FMS's projection of actual revenues with the COVID-19 impact. As I did mention previously, most of our revenues are paid in arrears. So we're really lagging and seeing the impact, but we will start getting some insight into at least March's activity later this month. As you can see, our overall projection is a loss of revenue of about $7.6 million. I'm going to go through each of those main categories in the next few slides. Starting with the general property taxes, the estimate here is a reduction of about $565,000. The property taxes are due on December 5th and June 5th. For December 5th, we've already collected those taxes. Typically, it's a 50-50 split. Our actual number for the December collections was 52%, so we were a little above budget. The property tax bills are billed in arrears, so the June 5th bills is based on activity from January 1st through June 30th, 2020. Because of that, we're not expecting any significant changes in property ownership, and we're not really anticipating any major changes. The reduction is really based on this time of hardship, as it may be difficult for some citizens to pay on time. The board has already waived the convenience fees to assist citizens in making payments online, and the Treasurer's Office is also doing what they can under the Code of Virginia to help citizens make their payments. We've also assumed in this projection that we will have lower collections of delinquent taxes. Over on the local taxes, the slide represents the different types of taxes that make up that category. We are projecting almost a $3 million shortfall in the projection. The assumptions for local sales tax, as well as the Historic Triangle additional 1% tax, is a 40% reduction in the average revenues that we typically collect. I will say there's no perfect science in this. We've done a variety of measures and doing our due diligence in our projections. For this particular category, we use 3 years worth of data as opposed to 1 year, at least on the local sales tax side. For the additional 1% Historic Triangle tax, as you know, that was new in 2019, so we really did only have 1 year worth of data to work with. We do believe that the online sales should help contribute to this revenue line, as we are seeing a spike in online purchases. I did want to mention that the state has allowed remitters a 1-month delay in making their payments. Therefore, what was due to the state in March is now due in April, which we expect will result in an additional 1-month delay to us. We do expect collection, however, it will further delay our insight into what the sales tax numbers may actually be. We are working with the state to determine whether this is a filing requirement or a payment requirement. If it's a filing requirement, we should be able to get those numbers. Over on the transient
Can I just ask a question about that, Ms. Day? Do we feel fairly confident at this point that those online sales are tracking city and county effectively, city, county, and York County effectively?
yes, yes. For the transient occupancy taxes, also known as the lodging tax, we've assumed a 65% decrease in the original revenues that we would expect for the last quarter of this year. Although most hotels are closed, there are timeshares and other businesses that pay transient occupancy taxes, which is why we haven't reduced it at 100%. On the meals tax side, we've assumed a 35% decrease in the revenues we typically collect. We've come to that conclusion based on the fact that a number of restaurants are continuing to stay open and have takeout options as well as delivery options. Those figures may be conservative. We may have to cut deeper. Occupancy and meals taxes related to March receipts are due or were due April 20th. It's my understanding that the staff in the treasurer's office are processing those payments, and we should have some figures in the next several days.
Will you be able to, I mean, you'll get some idea
Yes.
from that now on how it's going. I have to say 65 and 35 seems rather optimistic because I don't know if even with offering curbside or takeout, I mean, some are really busy. I think others are, so they may make up for, but I don't know. It just, and 65% occupancy.
I will say on the meals tax side, it does also include fast food restaurants, which have remained open.
Yes.
So we don't expect to see a decline there. We actually expect we may see an increase
Okay.
from those businesses, which help offset some of the other restaurants.
And you'll keep us posted as you start to see those receipts come in. And
Absolutely.
Okay.
Yeah,
But
absolutely.
I would think though, since no one's going out, and I frequent those fast food spots here and there with my work, and there's a lot less people going in and out of that than there ever has been. And, you're seeing, that people not sitting in there at all, and the ones that are going through the drive-through, the numbers are probably 25% of what normally goes through there. So I would see that as I think we're gonna see more of a loss there. I don't think that's gonna carry anything for us.
And I agree. We do also collect meals tax on groceries. So there has been some discussion that we'll see an increase in our meals
would
tax
bet
from
on
grocery
groceries.
stores as people cook at home and eat at home,
Yeah.
as more people are home.
See it.
But
Take
to your point, if you want to tell us, hey, we'd really like you to have that a lower number, that was where, like as Sharon indicated, these are our estimates. It's just based on, it's a strange time, so we don't have a lot of history. If you'd rather us lower that number to some different number, we can plug that in and tell you what that number looks like.
Well,
And
I think that I'm only speaking for myself, but as long as you're having conversation with the treasurer, and if you start to see something really going way different than you anticipated, and you can update us on that, that's probably the way to proceed.
And these numbers are difficult because we're looking at things as they are today. But the numbers that we're getting ready to receive in April were really for March. And for half of March, businesses and hotels were still open. And so the decrease there is more like 20%. It's the other 2 months where we project that we'll have a steeper increase. And so that's where you get an overall 65-35. In the next few days, we'll have a better sense because we'll actually see March's numbers and we can make adjustments from there.
Well, is there any way for Chris to reach out to some of our businesses as well? How open are they with talking about their receipts? Like how much business is down at particular restaurants? That we might get some type of information that way.
He would get some, but I think it would be limited to, the ones that are open are certainly gonna have a manager there that would talk to us. Those that are not open might be harder to get any information at all. Might be the restaurant association would have some
Yeah.
insight into that. So I certainly don't mind having them reach out to the
Yeah.
restaurant association and see if they have some figures they could share with us on that side too.
Yeah, and hotel motel too, because, okay,
I would think too, you gotta look at Busch Gardens. they're not selling any food. So I think it's gonna be a lot higher as far as what we're not gonna receive than what we probably have projected. It'd probably be a 75 and 50. I would see it more leaning towards as far as, you know, a loss and, of what we're gonna do, because I know you can speak very well of hotels and motels and
Yeah.
what's going on there, and you're at a zero.
Yeah.
You know, so I'm sure the others are feeling the same pressure, and the restaurants are there. I think what they're trying to do by offering takeout and all that is, I need to make enough to stay open to when this comes back. And so they're all bleeding. There's a few that seem like they're really busy and doing things, but I wonder how much they're eating up in fuel and paying extra, you know, to deliver and get things out there. So, you know, I think the numbers are gonna be a little bit higher.
Yeah.
Thank you.
Over on the bank franchise side of the house, those taxes are a year in arrears. So the bank franchise tax is due on June the 1st, but it's based on receipts through calendar year 2019. Therefore, we don't really anticipate having an impact there.
Until next year.
That's coming.
That's the next sheet.
For business licenses, permits, and fees, business license makes up the majority of this category. We are projecting about an $800,000 impact. Business licenses were due back on March the 1st, so the majority of this revenue has been collected. However, the reduction does assume that not all of the outstanding balance will actually be collected. We are having limited permit services being provided in order to keep our inspectors and our citizens safe, so we do expect to have some impact on our permit fees as well. On the state revenue side, we're projecting almost a $1.6 million impact. Included in that category is the sales tax for education. 100% of that revenue that we collect is passed on to the schools. We would expect that we would pass along the actual revenues, so if we receive less, we would pass along less. The Personal Property Tax Relief Act is a block grant. It's about $9.7 million. We receive it in 4 payments over the year, and at this point, we haven't received any notification from the state that there would be any difference in what we can expect to receive. For the Compensation Board for constitutional officers, here again, we have not projected any significant decrease. We haven't received any information otherwise. We do receive weekly updates. I do know from past experience, this is an area that the state often looks to when they're looking to make reductions in their budget, so we will keep a close eye on that. And then also included in this category are several other items that are more related to sales. Of course, our DMV Select services at Satellite Services, the communication sales tax, which is the tax you pay on your cell phone and your home line, car rental taxes, and similar categories. Here we made the same assumption as we did with local sales tax. We assumed a 40% decrease in those collections. For charges and services, we've estimated a $1,585,000 overall reduction. The majority of that does come from the Parks and Recreation area, about $900,000 of that total. Again, we assumed here that we would receive 0 further collections through the end of this fiscal year, as most of those programs have been canceled. On the medic transport recovery, this is our ambulance services that we provide to citizens. We did assume a reduction of about $300,000 here. We're not actually seeing a reduction in the number of transports. However, we do expect we may have more people that are unable to pay their bills, their ambulance bills.
We don't, we send a reminder letter, but we don't take that to collections or
That's
anything.
correct. We have a soft billing policy.
That's paid out of the insurance.
In most cases, it's Medicare, Medicaid, and insurance.
So then I guess I don't understand why we would see a reduction.
We do have some self-pay. We have about $2.7 million, and about $600,000 of that are self-pay. So we've assumed about $300,000.
So the self-pays would be mostly tourists, is that?
People that are not eligible for Medicare, Medicaid, and do not have insurance.
I see, okay. But if they're county residents, we don't really.
We don't
follow
go
up on-
after them.
Right. So I'm still trying to struggle with what's the source of the reduction in revenue?
We do bill it because it is technically revenue, and we
Right.
record a receivable for it. But if it goes unpaid, that's less revenue that
So
we
you're
would
just
collect,
assuming that there's going to be an increase in the number of people who are
that
who
do
are
not pay.
not going to pay it.
Correct.
But we do have people who currently are paying it even if
Yeah.
they don't have insurance?
Yes.
That's 2.7 million?
600,000.
Yes, yes, of the total. In the courthouse and other fee category, we also projected about a $400,000 reduction here, primarily because the courthouse has either been closed or is providing minimal services at this time. Miscellaneous includes everything else. This includes items such as the dollars we collect for responding to FOIA requests, it's parking tickets, it's the lease of some of our cell phone towers, it includes interest income, sales of surplus property, items of that nature. We have assumed about an $85,000 reduction in this category. For example, our surplus property sales have basically ceased, because most of those do occur in person, and because of the social distancing rules, we are not doing those things at this time.
Go to courthouse, one thing I want to ask is, has there been any furloughs with the courthouse, being that the courthouse is not open, or?
Not that I'm aware of.
I don't believe so, no, sir. I mean, they are still working in terms of in the office and at home. I know they're doing some of both, but I don't believe there've been any furloughs other than for part-time staff within the county structure yet.
There's no one coming into the courthouse and there's no court proceedings?
Very limited is my understanding. Only certain types of cases. Yeah,
So I'll follow up on that question if I could, because the constitutional officers offices that you said that the state often, so sounds like the sheriff's department is continuing to pay staff, and their primary job is providing security in the courthouse. So that's just one piece of it. What type of conversations have we had with our constitutional, and which I realize they're duly elected, so, but are they aware that if, this could be an area that they could see a reduction and they might want to be looking for some efficiencies as they proceed, or have we started?
We have talked about it. We're doing weekly conference calls with our department heads and the constitutional officers where we're going through those discussions. We're talking about revenues. We're talking about employees. What my guidance has been to all, and again, the constitutional officers don't work for me,
Yeah.
but the guidance to all has been the same. If we have employees working, then we ought to be paying them. If we have employees we can't find employment for, or doing some comparable type job so that we're getting some benefit, I don't see how we pay them just to pay them. And that would be my philosophy with our staff. And I will tell you, we have some at home that are telework. I am sure some at home are doing the job plus. I'm sure some at home, we've probably got to watch a little closer, but I do believe we're paying our employees to do a job. And as long as we're doing that, I'm comfortable with that. So we've had those conversations almost every week. I mention that in the call, so it's on everybody's mind, because that's important for us to maintain the public's trust that we are not just sitting here being paid, that we are working and we're here for them. And I think the constitutional officers agree with that, but I don't know in detail of how much backlog work they've had. For a lot of departments, we've had folks say, hey, I've been able to get to the stuff that I wasn't able to get to for months and months, or maybe beyond. And so I hope they've been able to clean up some of that. To your point on the sheriff, the courthouse is still open, so he still has to provide at least security for the building. So there is some of that still going on.
Okay, good.
And some limited court proceedings, as I understand it. But it's not the same as, I don't know if that staffing requirement is the same as being fully operational.
Sure.
But I don't mind asking to get a little more sense and to reinforce that point. I do think as we're paying employees, they should be working. And if the job's not there to be done, we either find something else, or we have to let them use their leave time or furlough on a temporary basis.
I mean, it's very tough conversations to have, because, you don't want to see people out of work right now, though there is assistance, at least for now. But I just think we have to, in the larger conversation, though, when we're talking about taxpayer dollars and moving forward, when we know we are looking at a very rough period of budgetary issues, this is the time to be very wise with the dollar moving ahead. And when it's going to be coming back on us for some of these positions, you know, I just want to make sure that we're all playing on the same field, like understanding what our outlook is, and this is why we're asking you if there's efficiencies that can be realized, you know, please take this opportunity to do so. So,
Just to piggyback on what Mr. Stevens has already mentioned, we treat them no differently than we do any other department in the county. So as we've been working with our departments on their budget reductions, they've been included in that, and they've been very, very good to work with. I know the sheriff specifically has several positions that he's keeping vacant. Getting back to the hiring freeze, some of those, for example, is his old position. So it's a high-paying position, and it's been vacant since he came into office.
wow.
So that's just one example. I know the treasurer, Jenny, is doing the same thing. Any vacancies that she has currently, she's continuing to have on hold. They've stopped their certification programs. They're not attending training. They're not renewing some of their memberships that aren't required, that are more discretionary. So they've been included in all of those things. They're also subject to the lower spending limits and the additional procurement and approval processes that we've put into place. So although they are state employees and we receive that state revenue, we treat them the same from an expenditure standpoint.
Good. And I know Ms. Foley has been working since she got into office to try to find efficiencies. So I'm sure she's continuing that through this.
And Mona is great in finding money.
Yeah.
She's very good at generating new revenue for us, and she's very creative on some of the things we've been able to do from a technology standpoint.
Please pass along our thanks to everyone for that.
Over on the expenditure side, getting back to the overall estimated revenue reduction of $7.6 million, this slide is really just a summary of how we would envision obtaining those savings of $7.6 million. This does assume a 50-50 split with the school division. They are aware of that. We've had several conversations and have been working with them on the logistics of these numbers. First, on the operational side, on the county, the $2.2 million is made up of the departmental reductions. Again, a number of the things we've already discussed in terms of hiring freezes, furloughs, temporary personnel, holding positions vacant, and then also scrubbing their non-personnel items. We've made up some funds on supplies, materials, training, those types of things. Over on the capital side, $1.1 million. The projects that are listed here certainly are flexible. These projects were obtained from the departments. It was their recommendations or suggestions. Stormwater makes up about half of that $1.1 million. Those projects represent projects that could be deferred into the future. Maintenance projects comes from general services, various HVAC, electrical, building maintenance items. For example, delaying the replacement of energy efficient bulbs, something along those lines. And then also included are some software and UPS replacements that could also be deferred for another year. The transfers number of $420,000 directly ties to the reduction in the lodging tax revenue. As you're aware, 60% of the lodging tax is mandated to be used for tourism purposes. So as the projection for lodging tax revenue goes down, so does our transfer to the tourism fund for 60% of that. So that is simply a math number. Over on the school division side, similar to the lodging tax, the sales tax for education, you heard about that on the revenue side. We were projecting a decrease in that revenue source that comes from the state that we pass through. So again, this is the expenditure side. Less revenue to us means less money that we pass on to them.
And do you, well, I don't know that they don't have to share it with you. I'm just curious, have they indicated how they might, where that money might come from, or?
They did provide, we had a conversation, they have provided a memo on some of the things they're doing on the operating side.
Okay.
Again, very similar to some of the things we've done, and then some additional measures, for example, any stipends that they pay to coaches for
Right.
athletic programs. Some of the academic stipends have also been deferred or delayed or not being paid at all. Again, just several of the other measures. I know they've had a reduction in fuel, less money being paid for bus drivers, substitute teachers, temporary help in the classrooms, that type of thing.
And that's on the saving side as far as what they've been doing up to this point.
Correct.
That wouldn't be a natural savings because they're not having those expenses. I know it's a small number, but it's a big number. And with us funding 52% of their budget, shouldn't the cut be 52% of savings? I know it's only 2%, but every percent counts, and once you get over 200 million. So
I think a fair way of looking at it perhaps would be to take the contribution to the school division and deduct out the debt service payment, since that portion of the 50%, 52% is mandated. There's no discretion over that, and then whatever that balance is.
you know what that number would be, or that percentage?
The debt service is 14.8 million. So about 95 million of it is operations and 14.8 is for debt.
Okay, and but that'd be the same thing as us with our debt. So
Yes.
it's still a tit for tat, so it'd still be 48, 52%.
Yes,
Even if because if we took ours off and we took theirs off, it doesn't decrease theirs, it still keeps the percentages the same.
yes. Our debt is less than theirs. Our debt payment's about 5.7, and whereas theirs is about 14.8. But we do have some other expenditures that are mandated, like the transfer for the lodging tax. So that would be one way we could approach this, is look at our budget, deduct those similar mandated type items, and then what's left over, and compare that to the school number.
And my questions are not to cut the school, it's to share in the misery we're all gonna have, but also as things come back, share in the profits, not profits, but the slow process of coming back and whatever, we're a team and we've got to attack this as a team and say each of us have to cut percentage wise of what we get in our budget. And then as things come back, then 52% would go to schools and 48% would go to us as we start rebuilding, to get back to where we were. So, I don't want somebody to think that we're, because these are hard decisions for this board to make. And they're tough decisions because we have kids in school. We have friends that are teachers and we love our schools, but, without any money, we can't show a lot of love. So we've got to figure out with this money where we can, best handle and spend it and what we're looking at. And we're all just trying to, it's all new for all of us. So we're just trying to, and thank you, just trying to figure it out.
And Mr. Dibble, I think we could relay that. I will say, in talking with the superintendent and her finance officer, they have been a team player. I mean, Sharon and I have had very good conversations with them. I think they do recognize the gravity of the situation and that things do have to be delayed. Just in totaling this memo in my head, it'll be close. It's about 1.2 million in operations, other items in capital. So I really think we'll exceed the numbers that she's showing you here, but this was just for this current year, the fair share. It's probably more important as we get into the next year's discussion to not split that. If we want to split that on a 48-52, that's where the discussion ought to be in terms of what we approve for them. But I think they'll hit what they've given us plus in terms of their costs for this year, because they do recognize the situation and where we are in terms of finances.
Yeah, and I just wanted to just make sure that everyone knew that, this board supports the schools, but in a tough time, you have to look at what's equal for everyone and got to put the leader in and take the heart out a little bit and move forward and get the job done and then come back with the heart later. So, thank you.
I guess in some sense, I'd like to see what the impact is going to be before deciding whether that 50-50 or 52-48 is the right split. We've been funding at higher levels in the past, the school as a share of the total budget, I think, up around 54, 56, even 58% at various times over the last couple of decades. And if we sort of assume that, the 50-50 number is the magic number, then that tells you one thing. If we assume that it's, a different number, what are you giving up by doing that? And so I'd just like to kind of know what the impact would be before deciding on what we wind up doing with it.
Right, but I also want to make sure that, that we give up together, because if if we don't give up together, then one gives up more than the other. And I want to make sure that, you know, because after we take out schools and police and EMS and fire and all that, and we take all that out, there's very little we have, as you know, there's very little we have to operate the rest of the county. And, you know, just want to make sure that, you know, we're sharing in both sides equally, or equally proportion to what you receive.
One of the questions I would have on this is with the capital and maintenance projects, because one of the things we went through back in 2008 was, I think we cut into capital maintenance pretty seriously, and ultimately things deteriorated over time, and we paid the price when we had to start fixing things later on. So I think there's going to have to be some recognition that you just can't arbitrarily cut all your capital maintenance. It has to be based upon what is needs to be done now to maintain our capability going forward, both from a safety and a financial aspect, and to you know, make sure that we're not cutting it too fine on that. And it's obvious that they have a significantly more amount of capital than is a greater portion of their share than is of ours. So I just want to make sure that when we have those discussions with the school board, that there is a comfort level that we are not cutting them to the point where it makes it more difficult in the long run to recover. So, and again, I think this is probably more important going forward into fiscal 21 than now, but still something we need to look at as we go forward. Okay.
And I had mentioned that in passing, talking with a few, that maybe we ought to look at for our next meeting is on our budgets and our CIP and all, as far as, okay, and put it into three categories. One being what is a necessity, like the chairman was saying, okay, if we allow the roof on this building, it's no problem with the building, but if we were to allow the roof on this building, for instance, to deteriorate to the point that it leaked, it would cost us more 2 years down the road to repair than it would be to continue it in the process. So maybe we put all our leaders together and say, okay, what do you have to have this next year? And what are the items that can be pushed off a year or two, and set a budget up, you know, just for our, you know, paperwork here, a budget up of number one. This is what we have to have. This is what's going to keep us where we're at. This is going to keep us on course. And then number two would be a budget set up with numbers we see that would be, if we had enough revenue in June, July of next year, then we could add items number 2 and 3 that we were going to have in here, but we can't. And then our third one would be the budget that was presented to us, you know, before this ever happened. This would be our ideal scenario if everything, if the world returned back to, you know, we were able to make that up, which I don't see it happening yet, and we're out of ways, but that would give, I think, our board, and y'all correct me if I'm wrong, just some snapshots of, okay, here's a budget with the necessities and without cutting. We're cutting, but we're not cutting, you know, everything out. This one is if we add 1 or 2, and this is what we saw in April. And then at the next meeting, we can kind of pull those out. And I see our next meeting as being maybe more in depth on certain things, and okay, they need this, and asking our employees, our lead people, what do you have to have? Because we don't know what they have to definitely have. And then it's up to our decision if we want to pull something or not, you know. And it may be something that we're not looking at as a maintenance issue or a life safety issue or a fire truck that has to be in because of problems. And so I'd like to see that if y'all are okay. And that would give us a little bit more guidance and maybe cut some questions out.
Mr. Chairman, I think Ms. Sadler has a technical problem. Would you want us to see just a minute if we can get her back quickly?
Absolutely,
I hate for her
yes.
to miss.
Oh,
I know she's watching at home.
Yeah.
But I also know she indicated she had something she wanted to share. So
Okay.
let me see if we can get.
Yeah, let's make sure we got her back online before we press on.
It has
All right, yeah,
new construction.
good on TV.
Okay, so we're back in session. Ms. Sadler, you're next.
Yes, hi, thank you. I'm not sure when to jump in with some of my questions and statements, but I'm just wanting to make sure that I conveyed some of the information about concerns I have about some of the CIP projects. A lot of the projects we've had in the past have been pay-go. We take our cash and we pay for those projects. Whatever projects we decide that we want to take on to keep some of our buildings maintained and those sorts of things, to keep our assets, in a good place and viable. My thought would be to take, instead of doing pay-go, to figure out how much we're going to be spending on some of these things and take out a small loan and keep our cash on hand. And then if we start coming back, like we're hoping we're going to, then we can take some cash and pay those loans off. But I think in these uncertain times, I think it's important for us to make sure we maintain as much cash on hand as possible, just because we don't know. I think I was telling Ms. Larson, I kind of likened it to the fact that, as an example, in our own family, we're not sure several months down the road if my husband's job is still going to be there. And maybe we're thinking about buying a car rather than taking $40,000 in cash and buying that car. I'd be more apt right now to take out a loan. And if things turn out the way we hope they're going to turn out, then I can take my cash and pay that loan down or pay it off. But right now, I think it's very important for us to make sure that we keep as much cash on hand as possible. And I was just curious, I don't know if I missed it or not, was there any discussion on how much of a decrease our beef poll taxes might be looking like, Sharon? Is that for 2020?
Yes, that's for this year. Currently, we, that tax was due back on March the 1st.
Okay, and regarding some of the meals, I'll just try to get everything in while I have a good connection here. Some of the meals and lodging taxes, I had a conversation with a gentleman, and he's part of the hotel motel group, and you may be on target with that. I'm leaning more towards Ms. Larson and thinking we may be a little conservative in those numbers and want to make sure that we do reach out to them if we haven't already to make sure that we're tracking so that we can get a real good estimate there with that. And then, let's see, what else did I have to ask while I have you still on the line here? I think that's it for now. And I agree with Mr. Hippel with the school discussion. I think that we want to make sure that, and we love our teachers, we love our schools. My grandkids have had a wonderful experience in our local schools, and we try to fund them as best we can with what we have. But as my grandma used to tell me, you can't get blood from a turnip, and so we have to join in this big picture thing all together. And yeah, maybe we have funded them more in the past, but if the money's not there, the money's not there. We've got to be realistic in what we're trying to accomplish with getting these budgets through. And if we've been funding them at 52, then I think that and it sounds like that they're being realistic, that they're going to have to take that same amount of a reduction as we're looking at in order to keep things on the same playing field. So that's all I have for now, and I'll text you back, Mr. Stevens, if I want to chime in again. Hopefully I'll keep you on the line by then.
Yes, ma'am.
Thank you.
Alrighty.
Can I just ask, do we have any indication, Ms. Day? We've historically had funds remaining from schools that we have to make determinations about in the fall. Is there any reason to think that that would not be true this year?
I know as part of this budget discussion, they have their own projections that they've done through June 30th, partially because of what we've asked for, but just to balance their own budget. Their projections specifically, for example, their sales tax for education is a lot lower than what we're projecting. And so I believe they said they were projecting 0 collections for May and June, whereas we did build in something. So based on their projections, they're breaking even. If they come in a little higher, which is where we're projecting, I would expect that they would have some additional funds.
Mr. McGlynn, I did share with the superintendent there might be a year where the board couldn't give those funds back, but
Right.
typically you've done that in the fall, as we sort of know what their year end is and our year end is. So I think you'd have some time to officially make that determination, but we did sort of plant the seed that this year might be a year where we don't have that opportunity to pre-fund some of their capital items.
Isn't, I remember, I think, isn't there a certain amount that they are automatically allowed to keep, like 400,000 or 500,000, but that anything above that, they had to come back to us for capital? Is my memory faulty on that, or?
There are some parameters in the agreement that allows for them to retain a certain portion of their capital dollars and reallocate it. If they have savings in one project, they can reallocate that to another project as long as it's another project that's already been approved and included in the CIP.
Okay. It would all be in that current FY20 year.
That's correct.
It would be just sort of taking money from one pot to putting money to the other pot. So essentially, it gives them the flexibility to reallocate some of that then.
That's correct.
But then the excess that they would normally come back to us in the fall for is what we would have to be dealing with.
Correct.
And you say that their figures are sort of anticipating that being zeroed out?
Yes, for
Okay.
the operating budget.
But if the revenues come in better than they anticipate, which is not as good as our estimates are, then there would be some, okay.
Either revenues come in above their estimates or
Or
expenditures come
come in
in
below.
even
Okay.
lower.
Okay.
I think last year they were right around 1%. I think it was like 1.8 million that they had last year that I remember somewhere
It
close
was,
to
it
that.
was 2.5 million,
0.5.
but we already include 600,000, so it was the difference.
Yep. 1.8, yeah.
And our share as well, because 10% goes to the city.
So, and I see where they have implemented the, the approval process that you mentioned earlier and everything, but we don't have any reason to believe that they would go on, try to spend some money that possibly instead of work towards the goal of return, like, oh, well, we'll buy this as opposed to returning. I mean, we're feeling like we're having a pretty upfront, good conversation with them, correct?
I do, yes, ma'am.
Okay.
I feel like we're having very good conversations, and they definitely are not trying to take advantage of something, or if they're not gonna get it, they're gonna spend it all now. I think they do recognize the partnership, and while they could do that this year, I don't think that, one, is where they're headed, but two, it wouldn't bode well for them in future years when you're considering other funding requests. I think they're working very well with us in terms of sharing information and trying to do the same things we're trying to do.
And we do share a procurement department, and so we do have visibility into any major purchases since we do have that shared service.
Thank you.
I did want to mention on the capital side, of that 2.6 million, I've really spent the last several days working with the CFO at the school division, scrubbing the capital fund for every project that remained, some of which were dated, some funding that started back in 2016, and that's continued. Of that 2.6 million, $2 million of that are funds that they've identified to give back. So that is not a deferment, that is a give back. So I did want to mention that, getting back to the cooperation and working together very closely. We did ask them to prioritize for any projects that needed to move forward. If it wasn't a deferment, to give us the rationale, whether it's a safety concern, or getting back to Mr. Hippel's point that ongoing maintenance would outweigh the cost to go ahead and replace it now. They did do that on a line-by-line basis. We've also been working with them very closely on projects that we can utilize bond proceeds for, so that we're given a little bit higher priority to that. We do have outstanding debt of about $2 million. So for some of those projects where they're prioritizing those, we do use our cash, but we're able to reimburse ourselves with bond proceeds. So. Okay.
All right. At that point, let me sort of stop and say this is the current fiscal year, and is there any additional comment, guidance, whatever from the board for staff going forward to our next budget work session? I'm pretty comfortable that this has got us where we need to be, I think, to finish out the year. But I want to make sure everybody else is happy with that, and that we're not going to suddenly ask new questions, new requests, or whatever. So if we have anything that we want to add now to our tasking of them between now and next week, now would be the time to bring that up before we go into the 21.
Well, I'll just say that you had sent us a copy, or I think we got an all staff that you sent yesterday, which I really appreciated that you sent that. I thought it was a very well crafted message.
Well, thank you. I had a lot of help, but thank you.
And but I think it's important because when you're having conversations that involve compensation and, how we're going to move forward, not just this $7 million, which is a large amount, but moving forward. And so I appreciated that you did that you were proactive in that matter. And so I don't think I would you seem to be looking at efficiencies now to get us through. We may have to do further as we navigate and get through the end of this fiscal year. But it seems as though that's what you're doing. So, I would just ask that you, as you've kept us updated, and that we continue to have that conversation so that we know. And, just reemphasize again, I think, and also backing up what Mr. Hippel said, where I get, I don't want to ask our employees to do something that somebody that we're giving money to isn't asking their employees to do as well. That I don't agree with, because we know that, we're probably, there's going to be some hits taken. And I think it's very difficult, and so I just want our partners to understand that, there's going to be sacrifices on our side, and there's going to be sacrifices on their side as well. But, we're not sitting here passing the buck. We're having to munch it up too. So I just ask for no surprises and just continue to keep us updated, and that's that on my end.
I just had a couple of questions or maybe observations about the budget process for this year going forward, and I'm sure it'll be true for next year as well. I know the General Assembly's meeting tomorrow to consider amendments that the governor submitted to the budget. And I also understand that there's going to be an effort before the end of the fiscal year to do an update on revenues so that everybody understands where things are going. We also have the CARES Act, and the CARES Act does provide money for local governments to recover pandemic-related expenses of one kind or another, and made me wonder about this ALS-BLS issue and whether that potentially is something that might be an impact of the COVID situation, because it does allow for the recovery of lost fees and sales taxes that relate to the pandemic. Now, I know that it's probably not just generally, well, your sales taxes have gone way down and your fees have gone way down, and so we'll replace that, although there's a good reason to think about doing that maybe in the next CARES packet that's coming along. But the question would really be, can we sort of make sure that not only we do everything we can to aggregate the costs that this is having on us, but also that anybody we're funding who either may be eligible for other aspects of the CARE Act, or that we might be able to work with in order to be able to justify claims against the CARE Act. According to NACO, James City County would be eligible for approximately $6.7 million under the proposal was just passed, but then the question is, how do you qualify for that? And that's, I think, for any expenditures between March, whenever the national emergency was declared, and December 31st. So it crosses both fiscal years. But just thinking about some of these kinds of questions, is it the case that if we, for instance, maintain our funding for WADA and they don't have fare collections that can support their operation sufficiently, is that something that is an area where we could see the opportunity to draw down some federal funds? I think there is actually some money for transit in that larger bill, but those are just the kind of things I'm wondering about, whether we haven't gotten any guidance at this point, I take it, on what.
Everything's been very general.
Yes, right.
There is quite a bit of information out there, quite a bit of misinformation as well. I told Mr. Stevens I've been inundated with emails and trying to go through those and decipher what is a reliable source versus a business that's trying to get your business type thing. I do think at the next work session, it may be a good opportunity to provide an update on the various programs that we've researched that we believe we would qualify for.
Mm-hmm.
There's a lot of information out there about programs that will provide revenue relief to localities. We have not been able to find that. We've been able to find loan programs that will provide cash, but it's a loan. Mm-hmm. And then there's been some programs that localities greater than 500,000 in population qualify for. Right. Direct funding. We obviously don't have that population size, so our funding would come through the state. But we do continue to research. There are quite a bit of programs. We have to make sure we don't double dip. There's a lot of opportunities. If you apply under this grant, you wouldn't be eligible for that grant. So then you have to look at those variables and decide which one benefits you the most. Some still have a local match, some do not. So we are working our way through that. I do know some of our partners have applied for and received some recovery programs. Old Town Medical specifically has recently applied for a loan and were approved for it. So that is something that, getting back to your point, we're working with them to see what other programs they may be eligible for that also could benefit us.
And Mr. McGlynn, is tracking cost, Ms. Day, early on in this thing, she's pretty experienced with natural disasters in our area and tracking cost. And from day one, she put out accounting codes for us to be tracking our costs. So we'll have a good accounting of our cost associated with it. The challenge is, can we replace some of those lost revenues? And so we'll have more information, but that's where we'll try to update as we learn more, to update the board and keep you informed of that as well.
And I did want to I know Ms. Sadler raised the question about borrowing versus pay-go. I did think I heard at the beginning of the presentation today that the intention is not for us to go into our cash reserves at this time, but rather to operate within the broader parameters of the budget as it was originally adopted.
Yes.
And I think that direction would be good for two things, to hold our cash and to hold that money that we've put aside and try to tighten our budget down for several reasons, not only because it's a smart business move, but also because these are the times that set things up one behind the other. So if we get through this, which we will, when we get through this, I should say, and we open back up, if there's a spike, if there's not a spike, we've got funding to take care of an issue. If there's, and one thing we need to look at, there's I think 8 named, or going to be possibly 8 named storms. We haven't had a hurricane here in forever. Wouldn't this just be the year that we'd get hit by that at the same time? And you remember years ago talking about certain things. Well, remember the year that we had this and this and this. And so we would have that money in reserve, even though we could get federal back from that, but we'd have money there to start the process of cleaning up, and then we might end up in a snowstorm in the winter. So, we gotta look ahead. I know it's terrible to say, but it's reality, but we've gotta, and it's good for the citizens to know that, if we have that reserve, we can use that, and that's what it's there for. But if we can figure out a way to hold it and use it if there's something else hits, then we're in a better position in the long game than we are right now. So, I think that, and then I would like to see, as I said, I talked to county administrator as well about it, as far as the budgets, 1, 2, and 3, 3 being the one we have right now. So it just, this is where we're at, this is what we're gonna look at if we continue. We look at these are things we need, and the chair was absolutely right. When they made the decisions to cut back, they cut, they thinking we'll save, so we cut to the point where, when I got on the board, we were still figuring out ways to cover some of the costs, but they had to do what they had to do. They had to cut and clean it up, and they did an excellent job on it. But now being able to see that, we're realizing that we may not be able to cut to the bone, might be able to just get the fat layer off. And, so that's my 2 cents.
Well, can I just to follow up with that too, because while I think it is important to keep in mind, and it's not necessarily going to change anything, but I think the schools would smack our hands if we didn't mention that they have not caught up yet from 2009. I mean, or that recession, and they're still being funded at 2009 levels, and sometimes further back. And I mean, that's on the Commonwealth, but we have been stepping in, into the trenches for that. So, so it's not as though it's not painful to be talking about cutting a budget, because, it's going to push them back even further. I realize it's the reality of the situation, but it does there is more mileage then to catch up on, so.
And I think you're saying that, and it's not due to us.
No,
Yeah.
no, I said the Commonwealth,
Right.
yeah.
Yeah, so.
I mean,
Just
yeah.
to drive that home. a
No,
little bit.
absolutely, so.
Let me ask, Sue, do you have any last minute comments you wanted to add? You have Sue still?
No, sir, I think I'm great for now.
Okay, good. Didn't want to make sure that we didn't. The only thing I would ask is, as has already been mentioned, is as some of these figures come in, just keep us appraised so that, we get an idea of, okay, yeah, this is better or this is worse, so that when we come back next week, we may be a little more prepared for what we're going to see.
Mr. Chairman, I know generally in May, we do our, approval of the budget, but we don't have to have it approved till July 1. So what if,
That was the question, that was a question that we had raised, and do you have any answer for us?
June 30th.
June 30th, okay. I thought that was the case, but I wasn't totally sure.
so maybe we hold off as close as
Well,
we
let
can.
me ask from an more of an administrative standpoint, because typically what has happened is we normally come back and do ours in early May. Schools have adopted their budget. What they have to do is, once we adopt ours and tell them what their funding is, they've got to come back and they've got to make their adjustments. So we need to leave some time for them to make adjustments prior to the end of the fiscal year. So yeah, I think we have the opportunity to push it back into June if we need to, but I want to make sure that we are aware that we don't want to hamstring the schools in their effort to follow up on
Hire
whatever.
and things
Yeah.
like that.
Now-
Well, get contracts out, I guess, because
Yeah.
they don't send contracts out, right, till they get our budget.
That's
So
exactly right.
we should probably find out what kind of impact that has.
Yeah.
And I'm just looking at as far as if any new information comes out that we don't know about and funding comes in that we don't know about, we may change course real quick before the end of it to ease some of the pain, and that may give us, because we may not know if we know this.
I have a feeling we're going to be changing course a lot next
I
year.
think so. I think so.
Okay.
Yes, and Chair, members of the board, I think you'll know a little more every month, but I don't know that it changes an awful lot month to month, but certainly you're gonna know more as we go forward in time. And obviously, this might be a year where you amend the budget a few times as you go through the year as well, depending on how the world plays out, so.
Okay, if we're ready, let's move on forward into the FY 2021, FY 2022 proposed budget.
Okay. The proposed budget was issued back on April the 2nd, and of course, again, that was prepared really prior to the COVID-19 situation and impacts. Measures were taken to address the COVID-19 to a certain extent. One example of that was moving $500,000, which had originally been earmarked for employee compensation, to a contingency account. However, further adjustments are expected as we learn more about the situation and potentially the lasting impact that it may have on the county. What we've done on the revenue and the expenditure side, just to start off, is 3 scenarios. The first one assumes a 3-month impact, meaning we assumed under this scenario that the impacts from COVID-19 would last until September 30th, so from July 1 through September 30th. The next column, the middle column, assumes that the impact is a 6-month impact, and therefore it would last until 12/31/2020. And then the last column assumes that the impact would go on for 9 months or March 31st, 2021. Just for rough math, the numbers are there, about 10.3 million, almost 20 million, and then 29 million. To give you an idea as a percentage, it equals the first set under a 3-month scenario is about 5%. It's about a 5% reduction to the overall general fund. The second scenario under 6 months would be about a 9% reduction, and then the third scenario is about a 13.5 or 14% reduction. On the expenditure side, same scenario here where we've projected a 3, 6, and 9-month impact. Here again, we assume that dollar impact would be split 50-50 with the school division. Similar to what we did in fiscal year 20, we have earmarked a certain amount of that to come from operations, a portion to come from capital, a portion to come from our transfers to our other funds, and again, most of that would be the lodging tax transfer, and then also the impact to our contributions to outside agencies. On the school division side, we also assumed here an operational and a capital project impact. I think at this point, what we're really looking for is some type of guidance from the board on where you'd like us to focus under these different scenarios. There's some assumptions that would apply in all three, and then there's different assumptions the longer you go. I am prepared to talk through the 3-month scenario if you'd like me to do that. But also if you have guidance that you'd like us to take a different direction or spend some time in all three scenarios, we can do that as well.
Let me ask a quick question. I understand you have details for the 3-month projection, but I think we had discussed before the meeting the potential that it would be probably the next meeting before you had specific, really granular details for the 6-month and 9-month projections. Is that correct?
That's correct. And a lot of the assumptions we made for the 3-month impact you've already heard. They're very similar to the 3 months of this fiscal year. It is, as you can see, it's 10.2 million and not 7.6 million. And that's because more time's gone on. We expect that the impact will get greater. We expect to have, for example, in the real estate area, we would expect to have a greater impact in that area. So the contributions to your lodging tax transfer, that's going to be a bigger impact. But that's why that number is different. The assumptions themselves are very similar under the 3-month scenario.
And Mr. Chair, if she could give detail, this sheet you had that we passed out would show you what those dollar amounts per category would be for reductions.
Right.
It doesn't give you the detail that she would have in this PowerPoint presentation for the 3-month scenario. We could talk in greater detail today about that one, or just be prepared at your next work session to be able to talk through what that means under the 6-month scenario, if that's where you'd rather us be, or the 9-month scenario. And I think that's where Sharon and it would help us with some guidance to know, do you want us to be planning for that 20 or $30 million reduction, or 20 million, or 10? And that's, any of those budgets will be the best estimate today and will be subject to change as you go forward through FY21.
Well, if we discussed the 3-month, perhaps you could hit on what if it went out 6 months, like, you know what I'm saying? If because they're very, well, they're not similar in amount, but the thing that the further we go, for me, like the 3 and the 6 month, and hoping to goodness sakes that it would not be the 9-month. I mean, I think we'll see an impact for much longer than 9 months, but hopefully we'll start also to see some recovery. So.
I think we could be. Let me ask if it's safe to assume that your 3, 6, and 9-month projections here are based on this going that length of time, and not necessarily including any recovery. For example, if we didn't start recovery until after the first quarter, so you got July, August, and September. By the time school starts in the fall, if we've started to recover, we're getting more back to normal. Then the 3-month scenario is probably a little more realistic, and that although the revenues are not going to recover completely, it wouldn't be maybe as dire as the 6-month projection would be, because that 6-month projection is figuring that it's still going to be like it is now on out for a certain time period. So I think that the further you go out, the softer it becomes. And I would like to, sort of, if we can, start with the 3-month impact, and keep in mind that when we come back to our meeting next month or next week, that we then can start looking at some of these, because as Mr. Stevens has said, I think what we're going to do is we're going to wind up picking a number, and it's going to be based upon our best guess, and then we're going to have to adjust to that number. And it may be that if If we pick a 3-month number, we have to, adjust and tighten our belts a little more. If we pick a 6-month number, maybe we don't. So those are the things that I think we probably have to look at the next meeting. But for right now, I think just if we can start with the 3-month impact, and then, as you mentioned, to ask a few questions maybe about how we might think it would affect us going forward. Is that,
Let me
I
ask,
Mr.
Go ahead.
Can I add into that, Mr. Chair, please?
Sure.
Can you hear me?
Go right ahead.
So, okay, thank you. My take on it is, rather than starting with the lower impact and taking things away if it doesn't pan out that way, I would prefer to see us look at a more strenuous between the 6 and 9 months and just plan for the hard hit. And then as things recover, then we can add back to that. I think it's going to provide a little bit more surety to employees and, in the general public. We don't even know what people's jobs are going to be looking like for the long term. So I think there's more to it than just, okay, we're about to back up for business again. I don't even think we have a full realization of what this impact is going to be. And I don't mean to sound doom and gloom. I'm very optimistic that we're going to make a great recovery. However, I go back to my grandma's old adage, you plan for the worst and you hope for the best. If we're planning for the worst case scenario, and then we can start bringing things back on board, if I were an employee and as a citizen, that would make me feel more confident that my elected officials are really taking a good, serious, hard look at how people's tax dollars are being spent, especially citizens who don't have jobs right now. So, like I said, I don't mean to sound pessimistic at all. I would just rather make that hard plan and then add back to it as things recover.
I can understand fully your concerns. There's also something that we all need to keep in the back of our mind, and that is perception. And the perception is that if you go to a 9-month impact, you're talking about making an assumption on the part of this board that we're going to be a year from now where we are right now. That's pretty pessimistic.
See, I would look at it a little different. I wouldn't look at it as a 3, 6, or 9 month scenario. I would look at it as, I think we're going to totally get back to where we need to be, or where we were before this started. It's probably going to be about a year out to get back to in a rhythm and smooth and not worried and going about our business. And I think it's going to be, I don't want to say that I'm all for getting things back up and running as safely and quickly as possible, but in a soft opening type, business type of way, not everybody just come back tomorrow, a slow, thought out, watching our numbers, watching what's going on, and slowly bring us back online easily, but to get us back up into full steam and in the economy. There are places in the United States right now that the factories have closed down. The inventory is just about gone, and they're not going to bring that back online tomorrow. I'm seeing it in my industry. It's going to be 6, 8 months to get back operating where they were. They're not going to. We couldn't find the people we needed when we were doing well. It's going to be even harder now because people will be scared to do certain things. So the impact is going to be longer. I think what we need to do is not look at necessarily the length of it, because it's hard to look at the length of it because 60% may come back in the first 2 months, and then other 40% may be 6, 8, 10 months down the road to get that last little push. I think what we need to do is budget-wise, and what I do in my business is how much I have, what's coming in, and what I'm anticipating that won't be coming in. And I think we need to anticipate we're going to have on our budgets, we're going to look at roughly a 20% loss. And we need to figure out what do we do if there's a 20% loss? And how do we take care of a 20% loss? And then if it's a 10, then we're heroes because we planned for the worst. And now we're able to go, and we set ourselves up to keep our employees, all our employees as possible, paid and moving forward. We've got jobs they can do. The county administrator now is working to slowly start, filling the rooms that are not anybody in there right now, put one in so they're safe, and slowly, bringing things back online with, we're not debating anything with the governor, what the governor says or anything else. We're staying within the rules and laws and everything. I don't want anybody to think that we're trying to buck the governor. This is not about the governor. It's about James City County, and it's about what's important for our community and what we need to move forward. And we need to do it safe and thought out. I think with a 3 month, 6 month, and 9 month, people will start looking at that and going, they think they'll be back in 3 months. Well, we're gonna get criticism 3 months, 6 months, 9 months, or whatever. I think we all look at it as a whole and go, how much revenue do we think we're gonna lose? What percentage? And then work from that percentage out. And if we recover in 3 months, that's great. If it takes us 6 months, 9 months, we haven't tagged ourselves to one set time. We've tagged ourselves to a cash availability. And this is what we need to work within until we get back up and running. That's just my 2 cents, but I think that's
So I guess my question is, define impact for me. Is your definition of impact everything closed? So 3 month impact is we're sitting here and it's August and we're still under stay at home orders. Is that how you've
Yes,
defined
it's really,
impact?
because we look at it as by the end of this fiscal year, we've already been in this for 3 months. So when we made this, in order to determine, whether it's going to be a 15 or a 20% impact, we had to make some assumptions as to how long we think it'll go on.
Because I don't think that we're still going to be sitting at home in September. I don't even,
Right.
I hope we're not still sitting at home in May, frankly, the end of May. But I don't know if that's a fair way to define impact.
Right.
Because we know that we have tourism spots that are trying to open around here, but they're trying to figure out how to do that. So, they could see a 50% reduction in the amount of visitors that they typically have for the summer.
Right.
And plus, they may not even start being able to do that until June, if the thing gets moved back at all, let's say June 1. So that to me is the impact. It's
Right.
not the closure, because hopefully by the fiscal year, this looks a little different.
Right.
But I do think we're going to have an impact for a long time. And so, I don't, is it better to go with a percentage, or is it better to, what's
Right.
the best?
And in order to get to a percentage, like I said, you have to make a lot of assumptions, and this might be a better way of presenting this. What we did is we went through each revenue source, and for example, sales tax, meals tax, and lodging tax. We went over the percentage reductions that we've assumed for the rest of this fiscal year. Well, we made the assumption the longer this goes on, those percentages are going to go up. So, for example, we said 35% for meals tax. Under the 3 month scenario, we think it's going to be 55%. And then under the next scenario, it's probably more like 65 or 70%. And so not all the parts are created equal. It depends on what the revenue source is. When you start getting into 6 and 9 months, we expect we're going to have a significant impact in real estate taxes. Not only people not being able to pay, but just no new construction, permit activity, parks and rec programs, those types of things. If and when we do open back up, getting back to your point, Mr. Hipple, I think there's going to be a supply and demand issue. And so even though we're back open, we may not be able to get the supplies, or if we can, it may be at a very increased cost where we want to hold off because we don't want to pay a 40% markup. So there's all those types of variables out there that right now we don't have enough information to accurately predict.
Yeah, because, so let's park and rec. We don't know how, You know, this community is very interesting. I mean, there's a large majority of people that are still being paid. There's a lot of government workers here. There's military. WJC still paying their employees. Women Mary's still paying their employees. They're still working. Or the professors are teaching. John, right?
Last time I
Just
checked.
checking. But there's others that depend on tourism. I mean, some of the well, tourism really isn't a business. This is our regional economy is based on tourism. And we have other people who are desperate right now. I mean, I tried to turn, I'm sorry, I won't get off to subject, but I tried to turn off of Ironbound onto Ironbound last week. It was backed up all the way. I was like, what's going on? It's food giveaway at the Salvation Army. They expected 150 people. They had much more than that. And so, it comes to Parks and Rec. Yeah, there's some people that are going to be able to afford to sign up for the dance classes and the various great programs that we offer. But there's others that can't. Restaurants we're going to lose. I mean, Richmond, they're dropping like flies right now. I mean, I think 4 long-time restaurants are not coming back. They've said we're closing our doors. So I think there's going to be some restaurants in our area that are in the same boat and unable to open. And then this kind of goes back to my what I said last time. What is going on at the state level? I know there's a lot to talk about, but there also has to be a plan of reentry, whether that's July or September or whatever. I mean, what are they thinking? Are they thinking restaurants at 50%? Somebody shared with me that, California was saying that, restaurants going to 50%, paper menus, throw away. There's ways to open restaurants that you can, if you're at risk, you probably shouldn't go, but if you're okay, So I think we really have to start talking about the reentry too, to kind of help have some of these conversations. But it goes back to what I originally said. I think the impact is based on something much larger than when the doors open, because we just don't know what that looks like. So, I mean, what's your recommendation for which impact we should look at?
Oh, if I knew that answer, I'd be in a different line of work.
I mean, what's realistic?
My recommendation, if we did anything, would be to go with a 3-month impact and make adjustments as you go. Because at this point in time, we don't have a lot of information. We will have some information next week, at least on meals and lodging tax, but again, that's for March. That's not the full impact, and we expect the impact will get worse as more time goes on. Even if we adopt the budget by June 30th, you're still only going to have a couple of months. We may not even have sales tax yet, or we'll have 1 more month of sales tax. But we're always at the end of the year 2 months in arrears on sales tax, and this year will be 3 months in arrears, and it's 3 months of critical information, both the sales tax, the historic tax, and the sales tax for education. So when you add those 3 together, it's $20 million of our budget.
And to add on to that, if I could, whatever budget you choose to adopt and whatever amount you want us to take out, Ms. Day and I and our staffs are going to be watching month to month, and large expenditures we're not going to do until we know the revenues are secure, because we understand that the money has to come in before we spend it. The only thing that is fixed without us taking action with employees is salaries. The salaries and benefit number is almost every 2 weeks. That's about the same number, and it's a number we can keep up with. If we had got in where revenues were tracking well below what we project, it could have an impact there. But certainly our capital projects, except for very mission critical ones, and that would be very few, we wouldn't award without the board's involvement, because you're making those award at the time for the contract, and we certainly wouldn't start the bid process on many of those things without talking with you and feeling pretty good. And that will take a few months into the new year before we have any idea what's really going on, particularly with sales tax and meals tax, because those do delay in what you spend it this month, but we don't see it for 2 or 3 months. So anything we do will be cautious in terms of next year's budget. So wherever you put us, we're going to help you manage through that and get there.
Yeah, so I guess I mean, if others are wanting to go further, I'm okay with this, with the 6 month, but I'm okay with the 3 month, but I would really hope that next Tuesday, I mean, realizing that March is just gonna just start the tip of the iceberg, you know, if we have to change course, you know, then we would need to change course, so.
And see, I still have trouble with the 3, 6, and 9 month.
You'd rather see a percentage.
I'd rather see a percentage because you're anticipating the time. And as you know, I'm pushing very hard to safely get James City County back to work. And safely, I'm letting everybody know, because I've had a few comments on,
Oh, yeah.
you know, doctors said this and doctor, I've got a doctor too. I understand what doctors say. And, but safely get us back to work. And I think percentage-wise, you know, regardless of how long this thing goes, and I know where you're saying you can't just blanketly, and I'm making it seem a lot simpler than it is. I understand that. And running a business and understanding percentages and understanding where numbers come from, and a plus is a negative, and a negative is a plus in accounting, and that confuses everybody. And, you know, so understanding that, there's, I think we need a goal of we're anticipating, we have to pick a number, because there's no way we can count on you with not having the information you need. It'd be like telling you to drive a vehicle down the road without a steering wheel. And you're like, I'll do my best, y'all, but I don't think we're gonna get very far. And you don't have all the information you need, so you can't feed us the information that we need to have, because you don't have it. And trying to rely on the state to get even more, I mean, they can't even get us open, much less give you information on what's gonna happen. So I think what we need to do is set a number and say, this is what, with our best knowledge, all of us are, I think, very smart people. Y'all bring so many great ideas to this board. And staff, we got such a good staff. We should be able to say, okay, here's the number we're thinking. This is where we think we need to be, and this is what we're gonna target, knowing that we're gonna come back probably and adjust. We're gonna have to work it, massage it, depending on if it goes real good, goes real bad. Because none of us have crystal balls, and we all wanna make sure our community is safe, and that because I know people that are losing their jobs, and they're probably not gonna get the job they had back at the pay they had. And all of a sudden, now they've got living at this level. Now the level came down with all the scare of everything the news is putting out, and what's safe and what's not safe, what I can touch, what I can't touch. And, you know, there's a lot of fears out there, and there's a lot of issues, and then you add family with it and everything else. And I think now's the time for us as leaders to pick a course, pick a direction. This is the amount we're gonna lose. This is the budget we're gonna go with. We're gonna discuss it even further and work it and massage it next week a lot more, and then see what the other numbers come back. John's made some good points. You know, hey, we wait a little bit, can't wait too long. Like Ruth said, we've got to make sure the schools got their time to do their stuff, but maybe we push it out to late May or something to vote on it. We have a special meeting to vote on it, and maybe 1st of June, or, you know, whatever y'all come up with, and we can then maybe get a little bit more information and check ourselves, and is this right? Is this, you know, but I think the 3, 6, and 9 months, to me, read that we're gonna get better in these times or worse in these times. It's where we're gonna pick a budget and say, this is what we're living within, just like we do with our family. I don't know how many houses I'm building next year. I'm anticipating more than this year. That doesn't mean it's gonna happen. And if the economy goes crazier than it is right now, it may be none. And so I've got to look at that and go, what happens if I don't? How do I survive? And I don't go, well, there should be a percentage of this, a percentage of that. I look at the whole and go, I'm gonna lose X. And if I lose this house, this, and this, then that's all gone. What do I have left? I'm gonna have to work within this amount. And I think that's what we're gonna have to do here is and you've done a great job. Staff has done a wonderful job getting us. We wouldn't be here without this type of information. But I just worry that 3, 6, and 9 month is gonna lock us into something. And if I was a citizen, and if I was a county employee, and we did 3 months, and then we had to adjust it because now we're gonna be 6 months, I would get a little scared because because we're solid right now. We're financially wise, we're pretty solid. We can have some problems, but the board did a lot through the years to put James City and staff to put James City in the position they're in right now, which is great. AAA, we're in great shape, but we don't want to lose any of that. But if I was an employee and 3 months it didn't work, and then we went into 6 months, I'd be talking to water cooler going, are they going to fire us? Am I going to lose my job? They had to change it. Now they're changing again. And there's talk, they may have to change it again. And, and we're looking at Justin to try to keep, but I think it'll send a message not only to the public, but it'll send a message out to the employees that may worry them. Because right now we're in a good position. We planned on this. We worked for this day. This is a day that we have worked years to put in place. Boards before us and this board here. So now that we're at it is a time that we need to enhance and grab it and massage it and say, this is what we worked for. This is what we put in position. This is where we're leading. This is how we can go. And this is the direction we're going. Whether we make the perfect move, but we're going to make a good move with all of our thoughts and all of our knowledge here. And direction for staff. We will make a good move. Yes, ma'am.
So let me suggest that I think this has been a really useful way to think about what's going forward. But we can think about it in other ways too. So an alternative way to think about what you presented to us today is, what do we think about a situation where we wind up with a little bit under 5% of revenue compared to what we were expecting. A little bit under 10%, a little bit under 15%, because that's essentially what you've done here, right? So don't think of it in terms of the months of this, but rather what the cumulative effect over the course of a year might be in terms of percentage of revenues that we were anticipating. And that, I think, it accomplishes the same thing. It allows us to set some priorities. Or you can think about it in some other ways. And maybe what you want to do is say, all right, let's think about what we would do if, in terms of operations and transfer to other funds and contributions to outside agencies, we were talking about one level of reduction, but that on our capital side, we're thinking about using a more tendency to adjust our needs there. To maybe, if we're thinking about a 5% reduction generally, but maybe more toward the 10% reduction in capital projects for the year. Again, I'm just suggesting there's some different ways to think about this than just in terms of this amount. I want to think a little bit about what the timeline we've been operating on. I know it seems like forever. And I know that people are hurting, both in terms of businesses that want to get their doors open but are afraid to do it because they don't know if their customers will come back to them, even if they did have their businesses open. I know that there are a lot of people who are going stir crazy and would like to be out. I know there are people who have to work and feel like they're the only ones out there. But basically this started in the middle of March, and we're just a little bit past that in April. So it's been a little bit over a month that we've really been in this kind of a situation. And if we look at the 3-month projection, we're really talking about a 6-month period, right? The end of this fiscal year and the first quarter of the next fiscal year. I can't imagine that in 6 months from the beginning of this, we won't have come back significantly in terms of the kinds of things that are happening in the economy. But not everything is going to come back very quickly. And I think we have to understand that as well. I mean, recognize that today our cases identified went up. So we have not hit the peak that then we're supposed to be on a downward slide for a couple of weeks before things open up again. And we know what will happen if we do open up prematurely, which is that we'll get an outbreak and we will have to close everything down again in order to try to get it under control again, and that's a real problem. But Colonial Williamsburg announced today they're not going to open until they're going to shut till May 31st. And I think that's a clear sign that they don't think that we're going to get that kind of level of all clear to kind of start getting back to normal until then. What can we do in terms of putting us in the strongest position? Because I think we have some great opportunities, but we're also particularly vulnerable because of the fact that we are a tourist community. We're also a community that has a large vulnerable population. We have a lot of retirees, many of whom have underlying health conditions that put them at risk and make them very wary about coming out. We depend on people coming here from other places, which potentially leads to the possibility of greater spread of the outbreak from other communities. And so what we really need to be trying to do, I think, is to offer ourselves as a community that wants to be on the front line of the broadest testing possible so that we can identify as many people in the community who are going to be working and identify those who are still or who are positive with the virus and get them to isolate and allow for a level of confidence to build in what we're doing, whether it's in late May or in June, and to kind of send the message that we take this very seriously. And if you're coming into our community, we want you to know that we're doing everything we can to make sure you're safe. And that takes a little bit more patience than people might like, but it's also not, I don't think, the middle of the summer or the end of the summer. I think we begin to see things getting back onto a reasonable path with people having confidence that we're in control of the virus before the end of this fiscal year. It seems to me that, what that may mean is that we not only have to be pushing the state and national governments to make sure that those effective tests are out there broadly and that we have a plan for making sure that people who are identified, we're able to get it into an isolation so that they don't spread it, and that we have a contact program in place. Now, maybe it's the case that we even need to think about spending some money on that we hadn't budgeted this year, but knowing that there are funds that might be recoverable if we're able to do that. And of course, it depends on other levels of government saying, yeah, you're right, this is a good place to try to do this because we're such a tourism-dependent economy here.
When I talked about opening up, a soft opening, and maybe I didn't clarify some of the points, but I wasn't necessarily referring to Busch Gardens and all that right away.
All right.
Because that would be a decision they'd make. But I was thinking of there's certain people that will not survive this much longer. Those are the ones I'm worried about. That's my concern. And there's a certain group taken care of here, and a certain group that's retired and taken care of here. But it's this middle piece that's very vulnerable. And they're all our friends and family, and all of us are concerned about them. I don't think we'll ever be able to test everybody. I think that's going to be darn near impossible and people coming in and coming out. And it's America; they can come in and come out whenever they want. So I don't know. We can't put a testing site at the entrance of the county. And I know you're not insinuating that, John, so I'm
Right.
just trying to say there's no way to get that number. So, you know, if you have a barber shop that has 8 chairs, maybe on Monday you open up with 4 chairs, and then Tuesday, and those barbers that work those 4 chairs work Monday, and then Tuesday, the other 4 chairs and the other 4 barbers or hairdressers work those, and you kind of rotate that in and out. I think we're trying to cover an elephant with a small blanket, and you know, it could be frustrating at times, because if I was retired and have my retirement funds and all coming in and all, I'm able to stay home a lot better. If the guy that's working or the girl that's working in retail or something day in and day out to support their family, they may not have that, and the funds that they're able to get may not be enough to carry them through. And then all of a sudden that goes into problems at home and everything else, and where am I gonna stay and rent, you know, and it's just, that's the one I'm fighting for. And not to open up quick, to open up and have the tests, you know, that, you know, if somebody's sick, we see there's a test, or if there's, you know, like we're doing now. And if it starts spiking up real bad, then we adjust and say, okay, we stay like this for 2, 3, 4 weeks. And then we go up from 25% to maybe 50%. And we stay there for 2 or 3 weeks or whatever and see what it does. And then, because eventually this will end and we're gonna go back to work. But it's how much pain we're willing to endure and how much pain we're willing for our citizens to endure in this process. And I don't think it's a right or wrong answer either way. I think it's a decision that needs to be made as far as how do we deal with it. And I think having total different points of view help us figure out where that middle ground is between view A and view B.
Well, we're getting way off of the percentage thing.
Yes.
But I have to, I'm gonna be the person in the middle
Thank
here and say that, you know, yeah, it went up yesterday, but let's be honest. Did more people get tested?
No,
Because there
no,
was
fewer did.
Because
Fewer
there were
did.
more tests?
No,
But
number of tests has gone down this week,
in James City County?
statewide.
But
So
if they
we
were,
don't know though, if more people got tested, if the availability, that's the problem.
That's it.
We don't know if there's more available tests, because I had this conversation with Mr. Stevens yesterday.
when they were tested.
Because I watched the governor's press conference. Well, you gotta have 14 days of numbers flattening, or not flattening, but going down, and we're, on the other hand, oh, well, goodness, good news, we got robust testing that's going to happen now.
It
We've
is
got all
going to
these-
happen, yes, but it isn't happening this week.
Correct. We've got all these additional,
The numbers
okay,
are
so
going
then
up.
our numbers are gonna go way up,
They
because
will.
more people, or not, maybe not way up, but more people are being tested, so we could never open if, I mean, truly, if we just, so that's where it's, you know, it's a really tough position. And we can't solve that here today. What we can solve here today, though, is what number we want Sharon Day to look at to get us to our budget. So our,
Let me come back if I can.
but
since
can
you
we,
get-
once we come up with this number, or can we take a 5-minute break
Yeah,
before we get
can take
into
a break.
21?
Yeah, we can take a break. Let
Okay.
me, let me offer, you know, I agree, 3 months, 6 months, 9 months. The one that's not on there, 12 months, okay? 10, 20, 30, 40 million, 5, 10, 15, 20%. Okay, those are the percentages, the dollar amounts and everything. The problem is that if we as a board want to tell them, all right, we're gonna pick a percentage or we're gonna pick a number, what are we basing that on? And what I would say is that we need to base it upon the best possible information we have from our staff, which is what they're giving us. You know, I mean, if you want to be real simple, we could say, all right, we're gonna cut $40 million, 20% out of the budget, boom. That doesn't send a real good message to a lot of people in the community. it doesn't send a real good message to a lot of our employees, because it's a figure that we arrived at, and we can't rationally explain, at least I can't, why I would arrive at that figure.
I can't on these either.
Okay. Well, I
Anticipating
can't.
35% loss on this.
I can anticipate, because every one of these has a line item that has some validity, some background information that staff has looked at. And if you asked me to put this together, I wouldn't have a clue. I have to rely on them for the detailed information, and then we have to make a value judgment about the validity of the assumptions and the validity of the information, and whether we think that's a reasonable thing for us to do. I'd like to see us, quite honestly, give them the opportunity, because we really don't have the full-blown presentation for everything here. I'd like to see us give them the opportunity to bring it back to us and go through this in a little more detail, one or the other, and then maybe we come up with, okay, I'm comfortable with 20 million, or I'm comfortable with 10 million, or you're comfortable with 30 million, or whatever, to where we can find out where we are as a board based upon the information we're getting, because right now we don't have that detailed information.
Exactly.
And
that
that's
was my point.
okay.
And these are anticipated. And if you listen to the
Well,
presentation, we're anticipating a loss of
And
X.
the closer you are up on the first column, I think the more accurate the information is. I think the further you go out into the columns, the more subjective it becomes, because you're making assumptions that may or may not hold true. The longer time goes, the more times things change, that could be off by a significant percentage, one way or the other. So I think I would like to see us come back and take a look at what they are going to present for maybe a couple, 3 options here, and then wrestle with that. I mean, is that, I don't want to punt the ball too much for you, as we want to try to give you as much guidance as we can, but I'm not totally sure that the board is where we would be willing to come to. I'm not sure we can come to consensus on, okay, we want X figure or thing right now because of the lack of information. Is that?
No, we don't have to pick an X figure,
Okay.
but we need to pick something.
So we don't know what this is gonna look like, and that's where we have to, at some point, the 3, 6, and 9 month scenarios do have number values and percentages attached to them.
Yep.
And some people may look at that as that's where the light switch flips on, and I don't think that's the case. I think it's what the recovery process is gonna look like. And to Ms. Larson's point, the fact that we're very dependent on the tourist industry, that's what gives me pause to want to be very conservative in our numbers because of the tourist industry. And so I don't know how staff, God bless you, Sharon, I think you've done an amazing job. It's like, I don't even know where you're getting the numbers from, but in reality, nobody knows. So at some point, we're just going to have to take some of these figures, and based on some of the outlook for what the tourist industry is going to look like, especially, and God bless retail, Prime Outlets is just, they're a ghost town. So when we look at meals and retail and tourism, everything that's connected with the tourist industry, how are we even going to know what that impact is going to be? When do you start measuring that? Because, when are we comfortable with tourists coming back in? When are we comfortable with, I haven't seen any guidelines from Richmond as to, maybe they're out there and I just haven't seen them, as to what the openings are going to look like. So as we do, as you say, Mr. Hippel, the soft opening. I don't know, and to your point with the barber and the hairdressers, and they can alternate, that's half the revenue, that's half your revenue. That's cutting them in half. So I'm glad that they could, with that kind of a thought, they could open, but that's still cutting them in half. So, how do we take all these different components, and they are all so different and how we measure them in our budget with revenue especially, and then put a number to it. At some point, we're just gonna have to pick a number, quite frankly,
Well,
in my humble opinion.
I can agree. I'll tell you, though, that I think that the projections of, the percentage decreases for the tourism-related taxes, I think are something that we can get a better feel for as we get more data coming in over the next month or so. And I think that absolutely, you make very, very conservative decisions on that. You do not count on a lot of revenue from that. And in fact, if you really wanted to, you could probably zero out a lot of it. Although you got to remember that not all sales tax is tourism. All right, not all transient occupancy, not all meals tax is tourism, although a large portion of it would be. So those particular things that we're looking at, I think you can make reasonable assumptions, and it would be in my mind a little more data driven. Those are the ones that they're going to drive this for the long term. I don't think that there's going to be nearly the impact maybe on some other areas like real estate taxes on your houses. A lot of people are, that's paid by your mortgage. If you pay, unless you default on your mortgage, which is another complete issue that you're going to be maybe dealing with at the national level, you're talking about real estate tax being paid on time.
Well, do we know the percentage of real estate taxes here that's paid by mortgages?
About 20%.
Yeah, that's not a whole lot.
Only 20%?
It's very low.
Wow.
I was surprised.
So
I-
if you've
I think
lost your job,
yeah.
I mean, I appreciate, I'm fine. Just if we wanted to do the 3, 6 a month, 9 today to get us through and looking at this with the thought that, we may have to adjust. And I hear you about scaring people, but there are people in this community that are way scared already. There are others that are just fine. They're still receiving that check on the 1st or the 31st or 30th of the month, and so they don't realize the impact. There's others, though, that have seen it since March 13th. And so I think we're talking about two very different James City counties. But I'm fine with looking at 3, 6, and 9 months and then having a discussion about what's an additional, if we get something next week which really isn't going to tell us much because it's March, but where are some other areas that we're willing to look and make some cuts? So, but I would really appreciate a
5-minute break.
5-minute break before we
Okay.
get into 21,
All right.
2021. Is that okay?
You all
Motion for a break?
motion for break.
Thank you, Mr.
We'll
Hempel.
take a 5-minute break. to order. Mr. Stevens, based on our conversation, just as we took our break there, would you like to propose how we would, we were considering potentially moving our next work session to the 5th of May, but then Mr. McGlinnan reminded me we also have a Service Authority meeting. I don't know whether that could be moved or whether that could be left the same, or what would your recommendations be? Because I think it was going to give you all a little bit better opportunity to put together more data and all the scenarios for us before we come back in to wrestle with it.
Yes, sir, Mr. Chair. You've talked about the idea of adopting the budget later, and certainly that works well and will give us more time to have more information. We are more than prepared to meet next week as we had previously scheduled, but if we're going to move the budget adoption back, the more time we have, the more information we'll have, the better information you'll have in terms of your discussions. I think May 5th would give us 2 weeks from today. We would have better information, and I would think, well, we would work with JCSA and coincide so you'd have both those meetings on May 5th. And again, I guess I've made the assumption if you're going to adopt the county's budget late, JCSA budget would go along with our schedule as well. So if all that's in keeping, then I think you could move. We would just need to advertise the meetings correctly, and we would take care of that following this meeting. So for the next meeting, just to make sure, and again, wherever you want to go on dates, we'll be happy to do. Following this meeting, what we would be working on for your next meeting is at least 3 scenarios and maybe 4 that would show you those differences between that 10 to 15 to 20 to 30% in terms of those, or 20% reductions, so that you have differences and you can sort of see them side to side, what that looks like with different scenarios that you would adopt. And
You're going to go through this right now, aren't you, though?
we can. I don't know if there's as much value. What we have
Okay.
today is just the 3-month scenario, so we're happy to do that.
Okay.
But I think it might make more sense to look at, it might be better for us to put it in a phrase that 3 months is here and then have the others beside it, so you can sort of talk
Okay.
or have some closer comparison, because we don't have any comparison data in terms of the presentation. We have just what the 3-month scenario would be.
Oh,
And
okay.
it sounds like we're probably that plus a little bit in most cases,
Okay.
so.
So but we've got to check with the schools and find out what kind of impact pushing our budget approval is going to do right to their contracts and those kind of things.
We do, and I will ask that, but I would expect if you delayed it 2 weeks, you could always move it back to your work session time for adoption, or move it to your first meeting in
Okay.
June, or to Mr. Hippel's point, have a special meeting if needed sometime. But it sounded like we were gonna delay the adoption a little bit beyond the first Tuesday in May.
Okay, well, I'm sorry I asked for a break, y'all.
Can I bring one other thing connected to the budget quick? I made an announcement 2 weeks ago about Harumfa and what we were trying to do there and help the communities out and all that. The first meeting I've ever missed, and I missed it the other day because it was a virtual meeting and I missed my buzzer on my phone and time got away from me. I was actually able to work for a little while, and so I missed the meeting. Well, during the meeting, they decided that they were gonna ask for the full funding, even though they have $1.3 million in reserves in the bank, had enough to float the $850,000 or $825 roughly $1,000 budget for next year, end up with asking the Roosevelt Group if they could, if there's any savings they could deem for this coming year, and end up with a saving, end up with the revenue of $300,000 to $600,000 for the startup of the following year. And then we were gonna ask everybody go back to their normal routine, but give the communities a break. Well, since I wasn't there, the vote went, and it went for fully funding. So I was not very happy about the way that went, and I'm gonna be reviewing the tapes on that. I've asked for those tapes. They have been sent to me, and I'm gonna review those tapes and see what happened during that meeting. But my recommendation is to do like we had like I originally said we're gonna do, and we could save on those fundings for Harumfa this year and set it into the following year's budget. So I would like to see that Harumfa is zero funding this year, and next year we'll talk about fully funding the following year rather.
I had a couple questions, if I could. I wondered if we had looked at, I don't know how our workforce looks like as far as seniority and the cost that is and benefits and that type of thing, and if we'd ever considered like going to employees that were in a certain category and saying, would you consider a buyout or a something like that? Is that anything that we've looked at as far as cost savings? And again, I have no idea how it looks, but would imagine there's some employees that have been here and very much appreciate, my goodness. But I didn't know if that's anything we'd ever looked at as far as cost savings. And then I didn't know, and I appreciate this, but had we looked at, or maybe you could tell me, and it wouldn't be that much money, but it would just be good to know, if we closed our recreation facilities on Sunday, or if we changed the hours, is there any type of savings to be found there? Which is really tough, because I tell you what, I know I'm on Mr. Carnifex's last nerve, because I'm sending him, like, the bridge board is broken. And Mr. Carnifex had an employee that went out and put an orange cone in a very dangerous place, and then somebody tossed it over into the marsh. And shame on you, whoever you are, shame on you. And I mean, really, I was at War Hill Trail today. I've been at Green Springs. Boy, are we blessed. So I don't say this lightly at all, but I'm just trying to think of some areas where I'd just like to know what type of savings that might be, to kind of help us until we know more about what we're looking at.
Yes, ma'am. On the retirement issues, let me at least do some talking with HR. We certainly know seniority. We certainly know where folks fall salary-wise. We've not discussed any buyouts, and I don't know how that would really work with VRS and what we'd have to pay to complete somebody who maybe has 26 years of service, and might be a more complicated response than I can give you in a short period of time.
That's fine.
But I don't think we've discussed that in recent years, but I do know localities sometimes go through that evolution, and the idea is that it is a cost-saving measure. So I'm happy to at least start that. And then with buildings, it's pretty easy to figure out a building or a facility cost, because the building itself doesn't save much by just turning it off for one day. Your heating and cooling systems don't go down and back up normally in an efficient manner. So normally what you're saving is your staffing cost. And we know how we're staffing our building, so we could tell you pretty easily that to open the rec center takes 12 people or whatever the number might be, and it costs us this much for a 15-hour day or 18-hour day, whatever those schedules might be. So I think some of that information we could provide pretty
In a
easily.
budget the size of this, it may, it's probably not going to be very meaty piece of it. I realize that. I'm just trying to get some answers to questions that have been asked of me.
Yes, ma'am.
And so I just would appreciate that information.
Sure.
So.
I think when we're looking at the scenarios for the next meeting, the 1, 2, and 3, whatever, I think that the detail we would be looking for, I think there's some significant differences probably between operations and capital, and being able to sort of put together and track how the capital part of it flows from one to the other, and how it sort of ripples. I think that would be an important part of any consideration that we would want to look at. I think that's probably more meat to that than there is to the operations side, although the operations side will have obviously some significant impact, but it is. So I guess the question we have before the board at this time is, do we wish to have a motion to amend our calendar to move our 28th, April 28th to May 5th?
Was it 5th? May 5th?
May 5th would be the first Tuesday. It would be 2 weeks later. It would then have us going our regular meeting a week after that.
Fine. I think that'll.
Motion?
So you're looking at moving the next work session to May 5th?
Yes.
Taking it off of next week and moving it to May 5th?
That's correct. Yes, it would be moving the 28th of April to May the 5th for both the work session and the JCSA, since it would be part of the budget process there as well. That would give staff an extra week to get information put together and to do the scenarios for us for our next work session. And then we would have that opportunity a week out prior to our next regular meeting. And then we can make a decision at that point whether we want to actually continue to delay the adoption of the budget or whether we think would be at a point to do so. But we would have options, different options going forward at that point.
Mr. Stevens, I would appreciate, even though I know it'll be anecdotal and not, data, a conversation with the Restaurant Association and with Hotel Motel to get some idea about what they're hearing.
Absolutely. I think we've had some of those, but we'll follow back up and make sure of that. And I had made that note earlier when you mentioned that, so I'll be happy to do that.
And also, if Mr. Johnson has heard of any businesses that may not be returning after this is over in James City, just so we have some ideas there.
And I would like to offer that, I don't know whether you all saw the document that was attached to one of the reports that Mr. Stevens sent us, was from the Office of Economic Development. And I had him send it out again because it was sort of in a strange format that didn't open real well for me. That was a very, I think, impressive document in that it, we worry about the economy, the tourism component of it, which is a big factor, and we've always been worried about trying to diversify our economy. This report, I think, showed us that we've had some really downsides on the tourism side, but on the industry side, we've actually had some pretty significant help and some gains. So I think people need to know it's not all bad news. And that was a very interesting report that told me a lot more about some of the more industrial or manufacturing aspects of our economy that are helping tremendously, not only with our economy, but with this with the COVID.
I was very surprised to read that our newest manufacturing company is already on the ground operating out of the county. That was remarkable news.
It is. So I need a motion to move,
Mr. Chair,
to amend the chair. Yeah.
Just a clarification, you can amend the meeting for the Board of Supervisors and direct staff to work to cancel and reschedule
Okay.
The Board of Directors meeting. So
Okay.
that would be, I hope, your motion at the end is to
Okay.
cancel this, or you reschedule the Board of Supervisors to May 5th.
And then have staff re-advertise for moving the JCSA to, okay.
Correct.
That's the motion.
We have a motion. Mr. Stevens.
Ms. Sadler?
Aye.
Mr. McGlennon?
Aye.
Ms. Larson?
Aye.
Mr. Hippel?
Aye.
Mr. Eisenhower?
Aye. Okay. At this point, I think we've gone through all of that. We had one other issue that if anybody else wants to bring up a board request for directives type of approach. Okay, I would bring up one thing, and that is that we had a discussion at an earlier time about potentially doing a letter to the governor. And, we've been through a couple of drafts. We've been through, I know Ms. Sadler has reached out to some of the other jurisdictions, and it's one of those things where I will tell you that after working with it for a while, I think it sort of comes back to like what we were doing with the Senate Bill 942. There were enough differences of opinion on issues that it was a little difficult, I think, to achieve what I would call true consensus. And this is one of those things that I don't think I would be really comfortable sending something unless we really had a complete consensus of the board. As a result of that, my recommendation to the board would be that I think we all have pretty strong feelings about how it ought to go. And I would think that it would probably be best for each of us individually to express those, if you wish, to the governor. I think it's especially a little more problematic when we start dealing with the other jurisdictions, although they are essentially on board. Every time they're on board, there's, but I want this sentence changed, or I want that sentence changed, or I want this idea changed, or whatever. That's if you're the one trying to accommodate everybody's things, it makes it
Well,
rather difficult.
But to that point, I think it's only fair if they're willing to participate in sending a letter, that, I mean, the couple of changes that they offered, a few words here or there, I think it's only fair to offer them an opportunity just to make a couple little changes in words. If I will just say for me personally, I've spoken with York County, and they're totally on board. I've spoken with Mr. Pons, Mr. Zhang over in the city, and they've talked amongst their group, and for the most part, I don't know 100% consensus over there in the city. They were waiting to see what a letter was going to look like, but they're very much on board with just sending this encouragement, because I think what you drafted was excellent. And they all thought so too. They just wanted to tweak it a little bit. I don't think it was major changes. It was just a few words here or there. So they were very much on board with just showing some interest. One of the gentlemen from the hotel group heard about it through one of the other localities, called me and said, "What can I do to help? I would be willing to get my group to send something in." So there's a lot of interest in sending something out. And if you're looking to pull back on that, I would offer that I would love to be able to take what you have here and on my own, anybody that wants to tag on with it, and I'll be happy to contact the other localities and let them know that we're doing it on our own. I don't know what your thoughts are, Mr. Eisenhower, but to this point, everybody was pretty much on board with doing this as a historic triangle. So I'm not sure where your thoughts lie with making it, the few changes that they offered. But are you talking about just not doing it as a board?
Yes, yeah. What I was talking about is that if like we did when I believe you and I both sent letters to the governor on Senate Bill 942. There was not a consensus of the board at that time to send essentially what we sent, but there was no prohibition from each of us individually doing that, and we did so. And I think that's perfectly appropriate, because I think that's, as each elected representative, you can weigh in on the issue. I really don't have any problem with even individually, if you want to talk to the other jurisdictions and see what they would like to do. My concern is that there are enough, if you will, nuances to it that some of our board members are uncomfortable with it, and I'm just not. It's one of those things I'm just not comfortable having a board position that we can't literally all get behind. I'd be quite honest with you. I think it would be very detrimental if we did that. I think that we're gonna disagree on some things, and that's okay. That's fine. We're not going to have complete unanimity all the time. I think basically we all agree that we would like to see the economy reopened. I think that what it boils down to is the degree to which other aspects would impact how that occurs and the speed with which it occurs. And that I don't think we're all necessarily right there together on that. So, I do not intend to try to tell you can't do something like that. I mean, good Lord, this is, you can do, as a representative, you can send a letter to the governor on the issue as you see fit. And we've done it before.
So would you mind if I took your letter and took out the part where you talked about in your capacity as chair?
Absolutely. I have no problem at all. If you want to use that basic letter as your letter, just from you as opposed to from the chair of the board, I would have no problem with that.
All right, I appreciate that. And if everyone's okay, I will reach out to York County and to the folks in the city that I spoke with as well, and let them know that that's what I intend to do. If any of my colleagues here would like to add their name to it, to sign below. If any of you all would like to jump in on that, feel free to give me a call. I'll call York County and my friends in the city as well and see if they would just like to add their name to it, and then I'll reach out to the hotel motel group and anybody else that might want to add their name too, just as an encouraging letter to Richmond that we're anxious to get things moving in a safe manner. Nobody's asking for us to, as we all have said, flip a switch on and just jump back in, but to do things in a safe manner. I think people are chomping at the bit to try to get things moving a little bit. So,
Ms.
all right,
Sadler?
thank you.
Ms. Sadler? Do you mind, once you've wordsmithed that letter, can you send out a copy?
I'd be happy to. Thank you.
Thank you.
Sure, thank you. I sure will.
Thank you. I do have the same question that I had last week. I did see where the governor yesterday, I believe, and I think you went back and watched the press conference as well, he did do a health team. But I am wondering what other teams are being put together about an opening, whatever you want to call it, reentry, blah, 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 blah. I would like to know the answer to that question. And if they haven't gotten one yet, when might they be putting one together? That would be helpful to know. So,
I certainly don't mind asking. Getting responses has been difficult to some of our questions. We have asked a lot of questions and gotten some response, but oftentimes we ask a question and we don't get an answer. And so I don't mind reaching out. I don't mind pushing in a couple directions, but anything you can do to help push those things along probably help as well in terms of our state representatives and trying to get answers back, because those are important questions, and I haven't heard enough to give you a good answer on what the plan is or what all the teams are doing. I know there's now a testing group in terms of trying to get better testing within the state, because that continues to be a significant problem with number of tests and availability, and I still don't know where we are as a nation with quick tests. I know I heard reports that we had some 45-minute tests coming, but I haven't heard of any usage in our area of those type testing, and that testing, having that result in an hour would help us a lot more than having it in 5 or 6 days. And so those are things that I know there's a strong push on. It's just, I don't know how to tell you what the answer to that will be yet.
well, and is the turnaround time still 14 days? So it went up. Is this from somebody that was tested 14 days ago, or were they tested 10 days ago? I mean, do we know that?
I don't with certainty. The state lab, they tell me, is still the quicker lab, and that's why a lot of the tests that we need a quick result for as a medical practitioner will be sent to the state lab, but their capacity is only so much. And so the hospitals were using some of the independent labs that were taking 6 or 7 or 8 days or 10 days, and then at least some of the hospital systems have tried to develop a test internally that would reduce that 7 or 8 or 10 day turnaround to something that's quicker. But it is an ever-changing, moving target, and I do think at the state lab, those test results are still coming quicker, but for most people, I'm hearing that it's a week to get your test result. And so testing availability seems to be better, but it still takes a while to get the result.
So it would be helpful to know some of that if you get the answers, because I don't know, I'm sure you may have seen where the governor of Maryland, he and his wife did a deal with South Korea and got tests, but I'd be curious to know if that they have them. Do they have a place to analyze those tests in Maryland? I guess that's part of the frustration is it's just I just don't even know what the turnaround time is, what's the magic number of tests that we need to have on hand. Hopefully those answers will be forthcoming. Yeah, great.
Question with the test. I know when I have a test performed at the doctor's office or at the hospital, it remains at the doctor's office, the hospital. If they're having different testing facilities, and I know the HIPAA laws and all that, but if they're introducing different type of facilities to start testing, are those test results that the people are being tested, are they being held there? Are they going back to their hospital or to their doctor? And is the other being destroyed? And the second part of the question is do they keep the DNA analysis of that individual in a database that should be with the hospital and not with a facility we're not sure?
Yeah, Mr.
That's a tough one.
Mr. Hibbler, you as a board have a lot of questions I can't answer. I don't mind asking a little more of that.
Right.
My assumption would be the labs that have been being used are credible labs, and I would think that would be the case in terms of DNA and those kinds of things with any test they're running, that there are protocols for that, and that they, or if they're keeping them, they're within whatever guidelines would exist, and I don't claim to know what that would be. So what I've heard typically with the testing is the state lab or LabCorp and one other large company that are reputable companies in terms of testing. And so, but it just got slower. The process, I guess they were getting enough samples, it just took a while, and so their turnaround time started going from 7 days to 8 days to 10 days, and a lot of the facilities decided that was just too long. And I know some of the hospital systems were trying to bring those testing in-house, so that when they ran a test within the hospital, whether it stayed in this hospital or at least within that group, they could better control the turnaround time.
Right.
Still was going to be days, but trying not to make it 7 or 10 days.
Yep.
So I'm not sure of other tests beyond that in terms of labs or facilities, but those are the ones that I've heard of. The LabCorp, the other large test laboratory company, and then inside hospitals or medical
I
practices.
know as they're getting more tests out there and test kits, and you can get this, you can get that. You know, normally it's pretty well protected for the citizens, you know, own personal use and their doctor and their healthcare provider and that sort of thing.
Yes, sir.
And it contains it, but the more that let's test more, let's test more, let's test more, it worries me that something may slip through the crack and there's a vulnerable side, and I just thought about it, you know, while you were discussing it, that there could be a vulnerable side that may get slipped through the crack, because I think we need to get quicker turnarounds and that sort of thing, and I agree with that. But in the process of trying to get that done, you know, just a question to ask to see if, you know, if that, I'm sure it's been thought of, but.
I had a follow-up too. I think you had sent us something about deaths and that there was going to be a presumption of COVID.
Correct. I think you had asked the question, but in the meantime, the state had sort of answered it to say that at one point you had to have a test positive for them to count a test positive. Now, if the medical practitioner, as I understand it, believes it was COVID related, it could be reported that way. So that would increase
There's still
some
testing. I mean, this is so hard to talk about somebody that's passed away. I'm sorry about that, but I'm assuming they're testing to be sure that was no.
No, ma'am, I think.
So, because then my next question was going to be, if it wasn't COVID, do they go back and, but they're not. It's
I
just assumption
think-
is COVID.
You know, there are probably some cases where they did have someone that was deceased, they test after the fact to determine. I think that did happen, but I don't think that necessarily is happening all the time. And I don't
Okay.
think going forward from here now, if they believe it was a COVID related based on symptoms, I don't think any testing is required to say that it was. And that's a change in the last week or two within Virginia anyhow, to have that ability to make that change. It's up to the medical practitioner to make that determination.
Today, the Virginia Department of Health website, I think, was saying that there were 330 or so deaths that were directly linked to COVID, and another 176 that were presumed, which would put the number over 500 as opposed to the 330 that was out there yesterday.
Yeah, because that's really tough, because
Yeah.
you hear that there's these symptoms, you know, it's like, and then you heard, well, no, not everybody has symptoms, or some people may have a fever, and so so one doctor may say, well, that's a COVID symptom, so I'm going to put down that cause of death as COVID.
You got
And
the-
another doctor could say, well, it was just a fever, there wasn't any upper respiratory, so I'm not marking that as COVID.
What you're finding is like the Teddy Roosevelt and all the sailors, all the young guys that are testing positive. Many of them are testing positive.
That have never had any
They have never had any
symptoms.
symptoms. Never had any symptoms. But they were testing positive, and they were contagious.
Yeah.
So those are the realities we're having to deal with.
Okay.
Okay, is everybody Ready to call it quits? Make a motion to adjourn
Michael's-
until 4 PM on May the 5th for a work session, and then we will allow staff to reschedule the Service Authority.
Motion?
Motion.
Ms. Sadler?
Aye.
Mr. McGlinnan?
Aye.
Ms. Larson?
Aye.
Mr. Hippel?
Aye.
Mr. Eisenhower?
Aye.
Motion carries.
Thank you. We are adjourned.